Hey everybody, it's Ed, and the future is now. And the future is the Tesla pre-earnings report breakdown of risk. If you want to know, everybody always asks me, hey, are you going to buy before the earnings? You're going to sell before the earnings? What are you going to do before the earnings? Well, I'll show you why as an example, like a quick breakdown of how I figure this. And it's always going to be a lot of guesswork, and it's always going to be a lot of just risk management. So first things first, we need to start with the possibilities. And you can see in the upper left column A, the possibilities are missing the EPS badly, a small miss of the EPS, them hitting the EPS, a small EPS beat, a medium EPS beat, or a huge beat. Those are really the possibilities. And I break it down kind of like, let's use the Archer example, target breakdown. Okay, if they miss badly, that means you're missing by a foot or you're missing by 10 foot. Either way, it's a huge miss if you miss the entire target. Okay, now the second part is a small miss. If they miss small, like they just barely missed the target circle by about an inch. So they barely missed it. It's not totally devastating, but they still missed. Okay, and now they hit the target. Okay, well, great. They hit the target, but they're supposed to hit the target. So that still could be a negative, okay, if they just hit the target. Also, if you go to the positives, they hit the middle of the target, but they didn't bullseye the target. They just kind of hit the middle of the target. That's pretty solid. That's good overall for the company. Now the medium EPS beat means they're beating it pretty good, and they're bullseyeing that target. I mean, they did really well. They bullseyed the target. Stock's gonna shoot up. This is a big thing. And then if they split the arrow like Robinhood, they're really the stock's going to go ballistic. I mean, if they blow away the EPS, the stock is going to shoot up like mad. Now, I also break it down in a bull case and a bear case percentage, meaning my bull case and my bear case. What are my bull case percentages that they're going to miss badly? Would be 5%. My bear case, it's about 10%. And the reason that would be different, why would I have a bull and a bear case? Well, my bear case being, let's say, solar, and nobody's buying a bunch of solar during October, November, and December. So their solar will be down. Maybe they'll miss because of solar and other things. Maybe the profitability of the cars is really low. I mean, it's a very low percentage that could happen, but I want to do, one of each, like a bull and a bear case for this. Everybody knows I'm super bullish on Tesla in general, long term. This is just based on the last quarter, Q4. Okay. Now, if we talk about, let's say, the bull case, you can see the percentages, and they both total obviously 100%. Small miss maybe 10%. Them hitting the EPS is about 20%. Small EPS beat maybe 20%, 25% medium, and maybe a 20% that they're going to crush it. Those are my bull case, okay, percentages. And then we've got the bear case percentages as well, and you can see the difference. These are the ones that you need to put in your spreadsheet. And if you need the spreadsheet and don't feel like making one, I'll be happy to send it to anybody who wants it, just to save you time and energy. And then you put in your percentages and what you think is going to happen. Okay, now the next thing would be the result estimates. Okay, now this is also ballparking as well, but I'm doing this based on what I've seen the movement of the stock. Okay, if they miss the EPS badly, you're going to see $100 a share loss. Okay, get prepared for that. Mainly because we've already pushed that $100 per share up into the stock. So if they miss badly, you're going to say bye-bye to that $100 a share. Okay, at least. Okay, that's what I'm figuring. Now, if they have a small miss, it's still a miss, and they're tanking. They're going to tank by about 50. That's just a ballpark. And if they hit the EPS, that's still not good enough because there's all this baked in, which we talked about before, the baked in analysis of stocks. So it's already baked in here. So if they just hit the EPS, you're going to see a loss. Maybe only $20 a share, or maybe 10 or 20 or even $30 a share if they hit EPS. So in my estimation, they're going to need a small EPS beat, a medium EPS beat, or a huge beat to see big numbers moving forward. I mean, if they have a huge beat, you're going to see this stock go from 550 or whatever it's at to 650 or whatever. You're probably going to see that. Okay, so we currently have 120 shares in Tesla right this minute. This is the 22nd, and you can see the gain loss dollar based on what would happen. Meaning, if they have a huge beat, we're going to lose 12,000 in one day. I'm prepared for that. I mean, I'm not going to be surprised if they have a huge beat and we lose 12 grand. That's not going to shock me. It doesn't mean that I'm going to be so anti-Tesla and I'm going to sell everything off necessarily or whatever, but I'm prepared for that inevitability so it doesn't bother me emotionally, so it doesn't mentally damage, oh my God, we just lost $12,000 in Tesla. Well, whatever, we've already gained 25, 30,000 in Tesla. So, I mean, this could happen, but once again, I'm putting it at about 5% chance to happen. Maybe a 10% chance that we lose 6,000. Okay, and maybe 20% chance that we lose 2,400. So there's a 35% total risk of something bad happening that would, do some damage to our 120 shares. Okay, now on the positive side, like I said, if they have a small beat or a medium beat or a huge beat, that's going to pump the stock up, and we're definitely going to make money off of those 120 shares. And there's about a 65% chance of that to happen, okay, in my estimations, okay, by the risk. Okay, so there's actually more money lost. Even though there's 35% risk, there could potentially be more money lost because, like I said, they have to more than hit the EPS. Okay, in my estimation, because all of the gain that we've already had over the last couple months. Okay, people are buying for expecting them to beat. Okay, so that's already baked into the pie here. Okay, now we've got the risk versus the dollars, which is the final part of this. Meaning, okay, we have really 15% chance of something really bad happening. Of course, I can't spell really, so we'll just do real bad. And anyway, we have a 40% chance of something neutral, meaning I'm not going to have any problem if something neutral happens here. I'm not going to be, I'm not going to be any selling of any stock or anything. If anything neutral or anything good happens, okay? So obviously, if something great happens, it's just more benefit for Tesla shareholders at that point. But you can see this breakdown, and I'm using this for my past data, like my data of when I've always studied the earnings reports and how they affect actual stocks. Like how much percent does a company move up usually after? I mean, if they have a big beat, companies usually move up about 10 to 20%. I mean, that's massive. I mean, can you imagine Tesla moving up 20% at 500? That would be what? $100 a share, right? If they were at 500 and they moved up 20%, that would be $100. So I'm not just making some random numbers up. I'm trying to go based on what I've seen the movement of a particular stock. Now, if it was Apple or Boeing or some other company that maybe moves a little bit slower, that those numbers would be a little bit different. Now, the one thing to factor in when it comes to the movement dollar value of the stock is the short position. I think Tesla is somewhere around 18 to 20% shorted right now. So that could actually drive up the stock a lot more because you're talking about institutional investors that are basically, they may have to scramble to cover, or short squeeze, whatever you want to call it. But basically, they may have to scramble it. So that could skew the data in this situation. I saw this happen with Apple. And when the iPhone was released and everything, and their earnings report came out, and the stock shot up about, I think it was like $18 a share, which is pretty huge. It was only at 172 when I bought in, and then it went to 190. And this is back before their stock split and everything like that. So, but anyway, I've seen the situation. So the situation can happen very similar because Apple, to me, is very similar to how Tesla is trading right now, how Apple used to be back in 2008 when they released the iPhone, just like Tesla releasing the Model 3. So it's a product similarity in that fashion. So people always ask as well, are you going to sell any shares before the actual earnings report? In this situation, no, because I'm looking at my numbers, I'm managing the risk. It's 65% chance of something good happening. And even if something bad happens at the 35% chance, it doesn't change my bull case for Tesla long term. Yeah, it means we get hit and lose some money temporarily, but we still own the 120 shares. So, I mean, if Tesla ends up getting up to $1,000 a share at some point in time, those $120 a share, 120 shares will be worth a lot of money. So, you can't, you got to look at things short term, but you also have to look at your long term situation as well. Kind of look at them simultaneously. Don't just look at the short term and don't just look at the long term. I may trade stocks in and out depending on moving averages and stuff like that, but I'm also looking at middle range and long term. I look maybe 6 months in the future. I look 2 or 3 years in the future, 5 and even 10 years into the future, where the stock's going to be. All of those play in to decision making. Okay, so I mean that's important too, and it depends on your specific situation and how you deal with it. So I can't say anything about that because I wouldn't know your situation. So this is a broad analysis, and you can use your current situation or how you look long term or middle term or short term on a stock to make your judgments on things. Plus, it depends on how much money you're risking. I mean, this is a pretty big risk. I mean, we could just duck out. We could duck out the day before earnings. We could duck out, sell all 120 shares. Okay. And that's fine. We'll have those shares. Let's say, specifically in this case, just ballpark, let's say if it does beat and then it goes up $100 a share. Well, now, first of all, I lost all that gain. Okay, no big deal. I lost 12,000 of a gain, which no big deal. But now we have to buy in. If we buy back into Tesla, we're buying at $100 a share more, which means now we don't have 120 shares. We're going to have a lot less shares long term. So it affects the amount of shares long term you have if the stock does drive up. Okay. Now, inversely, if we sell out, let's say we sell out all 120 shares and they completely miss, okay, we can buy in maybe 130, 140, 150 shares in at a way lower price. So, I mean, you could do that as well. But since my percentages are way lower of that happening, I wouldn't do that in this situation. So I don't see a likelihood of any of these 120 shares being sold based on my calculations. Okay, this isn't some emotional thing. Oh, yeah, I think Tesla is going to be a great company. I pretty much know they're going to be a great company, but I'm not trying to be emotional about this. I'm trying to look at the numbers and trying to make my own educated guesses. So use a little bit of math to figure out what may or may not happen. And then the next earnings report will have this pre-Tesla earnings report spreadsheet, and I can figure things out a little more detailed and become more and more accurate as I track Tesla over the next 5 or 10 years for every single earnings report. You're looking at even earnings report over 5 years times 4 is 20 of these earnings reports. So anyway, that's how we break this down. Be sure to subscribe and hit the bell notification if you want some data and some things like this in the future and what we're doing and why we're doing it. I'm not advising you to do or not do anything. I'm telling you what we're doing and what's the data that I'm using, even if it's just guesswork data, even if it's just using my own math to reinforce the confidence or fear of what I think can or can't happen. So anyway, thanks a lot for joining us today, and I hope this helps you guys out to be a little bit less emotional when you're dealing with stocks, especially a volatile stock like Tesla.